So has tech become a safe haven for investors? I spoke on previous shows about tech many times, and coming into 2023, tech was, as I've said many times, the hardest hit area in the previous year. So it makes sense that a lot of individual investors would be looking to buying tech on the cheap as a good value investment. Now, how many times do you hear that, right? Tech being called value, but really it is. And when you look at where the problems are in the economy today, in the market today, you look at banks, you look at interest rates, you look at cash, who has the cash, where the cash is going, where the money is moving to. And so you can't help but to notice that it's the big tech names that are flush with cash. It's the big tech names that have billions and billions of dollars to spend, to make acquisitions, to grow their business, to put towards future potential like artificial intelligence or the cloud. So when you look at why tech is actually or has behaved as a safe haven, hasn't gone down as much as many other sectors in the economy, being flush with cash is one of the main reasons. Another main reason is interest rates. When you see interest rates moving higher, as we did in 2022, that affected the stock market, and in particular, technology stocks. Interest rates higher, tech stocks were selling off. So what have we seen so far this year? We've seen interest rates falling, not moving higher, going in the other direction. So obviously, money's been flowing back into tech. So it's been having the opposite effect. Low interest rates, lower interest rates, and tech stocks moving higher. Even if interest rates start to move back, I think you can make the case that they're probably closer, they meaning the Fed and Bank of Canada, well, Bank of Canada is already on pause, but the Fed is closer to the end of the higher interest rate cycle or the hiking of interest rates than they are at the beginning. And again, you can make the case to buying tech stocks on that premise. So let's take a look at a couple of tech stocks here that I think have acted as a pretty good safe haven for investors. First one is Meta. Meta, or as some of you may know it as, is Facebook. You can see how much Facebook has risen off the bottom. We were as low as $80 on this stock, and now it's over $200. So anybody who had the iron stomach to buy into Meta or Facebook under $100, you pretty much doubled your money recently. Moving to another name, Microsoft, another of the big tech names, the big cap tech, one of the largest companies in the world. You can see how much Microsoft has bounced off the bottom. At one point, Microsoft was down 220 in that range, now all the way up to 270. So two names that I think are great. Some of the best company, two of the best companies in the world. A couple of names on the chip side of things with the talk about artificial intelligence and gaming and automotive. Got to look at AMD. AMD is a name that $96 was as low, I believe, somewhere around $80 a share. So up quite a bit over the last few months. And probably the biggest mover out of all the chip names, NVIDIA. NVIDIA chips is basically what's going to power artificial intelligence going forward. And we heard from the CEO yesterday, Jensen Huang, talk about how NVIDIA is set up to take the world to the next level in artificial intelligence. And it's going to be powered by NVIDIA chips. And that's why we've seen NVIDIA go from about $120 stock to a $262 stock in the last little while. So tech has definitely been that safe haven for individual investors. Not only you can hide out in there for the last couple of months, getting through some of the banking situation, the banking crisis, but you've also not only been hiding out in tech, if you have been, you've also seen tremendous growth, especially in some of the big cap tech names and some of the chips. So going forward, I think you can continue to look at tech as that safe haven while we get through this banking crisis. But I also think once we're through the crisis, tech will still behave as a growth engine for individual investors.